Adap, my name is Rony. My last three digit 1222. My presentation topic: the monetary policy of Bangladesh. The latest monetary policy declared by Bangladesh Bank aims at steering the economic landscape with a balanced approach towards growth and stability. Economic objectives: Economic objectives: price stability, maintaining inflation within a target range to ensure economic stability. Sustainable growth, promoting a balanced economic growth post-pandemic with a focus on key sectors like manufacturing and agriculture. Financial system stability, ensuring the robustness of the banking and financial sectors. Key policy changes, interest rate adjustment, an increase in policy rates, including the repo and reverse repo rates, to control inflation and manage liquidity. Inflation targeting, adjusting inflation targets to address current economic challenges and ensure consumer price stability. Credit growth limits, modifying credit growth limits to support priority sectors, especially SMEs and agriculture, to drive inclusive growth. Forex management, enhancing measures to establish the exchange rate and support the external sector. Monetary policy tools, interest rate policy, open market operation, reserve requirements, and moral suasion. Here the interest rate policy utilizing tools like repo and reverse repo rates to influence the money supply. Open market operation, conducting OMAs to manage liquidity by buying or selling government security. Reserve requirements, settlement and adjusting the cash reserve ratio and statutory liquidity ratio to control the amount of funds banks must hold in reserve. Moral suasion, engaging financial institutions through advisory and impartialship practice to achieve desired economic outcomes. Recommended policy reforms: regulatory strengthening, enhancing oversight and governance of financial institutions to mitigate systemic risks, financial product innovation, advanced data analytics, digital financial inclusion. Let's expand on the latest monetary policy by Bangladesh Bank in table format with more details information. Aspect: Policy interest rate details increased from 9.50% to 10%. Repo rate increased by 50 basis points to 10%. Standing lending liability upper limit raised from 11% to 11.50%. Standing deposit liability lower limit raised from 8% to 8.50%. Inflation targeting adjusted targets to better address ongoing economic challenges and ensure price stability. Credit growth limits: Enhanced limits for credit growth to priority sectors like SMEs and agriculture. Foreign exchange management: Implemented measures to establish the exchange rate and support external sector stability. Digital financial inclusion: Expanded initiatives to promote digital financial service and increase financial inclusion. Regulatory enhancements: Strength oversight and governance of financial institutions to ensure financial stability. Significant changes compared to the last policy. Interest rates, repo and reverse repo rates, standing faculty rates, inflation targeting, revised targets, growth limits, sector specific adjustment, enhanced credit growth limits to priority sectors such as SMEs and agriculture, promoting inclusive economic growth and diversification. Foreign exchange management, stabilization measures, implemented more robust measures to establish the exchange rate, supporting the external sector and maintaining competitiveness in global. Support for digital financial inclusion, emphasis on digital banking, regulatory enhancements, strength oversight, improve regulatory framework and governance of financial institutions to mitigate systemic risks and ensure financial stability. What are tools used by Bangladesh Bank? Here the topic: interest rate policy, open market operation, reserve requirements, moral suasion, prudential regulations, foreign exchange interventions, credit control, digital financial service. Here the interest rate policy, repo and reverse repo rates. These are short-term borrowing and lending rates for banks, helping to control liquidity in the financial system. Standing facilities includes the standing lending facility and standing deposit facility, providing liquidity support and absorbing excess funds. Open market operation, buying and selling government securities through OMOs Bangladesh bank can influence the money supply by purchasing or selling government bonds and securities. Reserve requirements, cash reserve ratio, the minimum percentage of deposits that banks must hold as reserves with Bangladesh Bank. Adjusting CRR affects the amount of funds, statutory liquidity ratio, the percentage of banks' net demand and time liabilities that must be maintained in the form of liquid assets. This helps ensure banks have sufficient stay. Moral suasion, prudential regulation, regulatory measures, foreign exchange intervention, credit control, digital financial service, here the open market operations. What type are? Open market operations involve the buying and selling of government securities in open market by the central bank. These transactions directly influence the money supply in the economy. How they work? Buying securities or selling securities. When Bangladesh Bank buys government securities, it injects liquidity into the banking system, selling securities. Conversely, when Bangladesh Bank is selling the government securities, it absorbs liquidity from the banking system. Objectives: liquidity management to maintain an appropriate level of liquidity in the banking system. Interest rate control to influence short-term interest rates and guide them towards the central bank target rates. Economic stability to ensure overall economic stability by managing inflation and supporting economic growth. Impact on banks, on borrowers, and on the economy. Suggest a policy reform needed from my understanding. Strengthening regulatory framework, enhance oversight, risk management, promoting financial inclusion, digital banking and explosion, foster the growth of digital banking service to reach understand and rural population, ensuring broader access to financial services. Financial literacy programs introduce initiatives to improve financial literacy among the population, helping individuals make informed financial decisions. Innovation in financial products, enhancing monetary policy tools, exchange rates stability. Here, the foreign exchange intervention, exchange measures to establish the exchange rate, ensuring competitiveness in the global market and supporting export, driving growth. Foreign reserve management, maintain adequate foreign reserve to buffer against external shocks and ensure currency stability, encouraging SME growth. Here the includes sector-specific credit programs and simplified lending process, enhancing transparency and accountability. It's included regular reporting and public engagement, enhancing financial market infrastructure, strengthening governments and compliance, promoting sustainable finance, facilitate international trade and investment, improving human capital development, enhancing crisis management mechanisms, encouraging public-private partnership, and transparency and accountability in policy implementation. Thank you, sir. Thank you, everyone. এত সময়